Hello everyone, and welcome to Forex Trading Made Easy. I'm George Smith.
Today I want to show you another day of trading the AVG strategy found at our membership site. Here you can see I've begun putting on limit orders, just 4 pips apart, each with a 9 pip stop. I was doing that for several reasons. First of all, the trading line on the right-hand chart, a modified stochastic, was turning down. Over here the MACD bars had bottomed, and the signal line would soon be rolling over. On the AVG log, I also noticed that the target of 2706 had been reached and slightly exceeded. The downside target was now 2684. We get that from subtracting 28 from the previous high. Here's my second order getting filled, and I got lucky on my first order. It was never stopped out. If I had been stopped out, I would have simply replaced it. Once I see that I'm not stopped out, I have to start thinking about two things: tightening up my stops and canceling that new order at the bottom. When I trade this way, I only want to have 3 orders going at the same time. Here's my third order getting filled. And as you'll note, I've now placed my exit order at 2684, the target that's shown on the AVG log. Here you can see I've brought all my stop orders down to the level of my second trade. If I'm stopped out, I'll only lose a total of 12 pips. Now that prices are moving in my favor, I brought my stop order down to the break-even level. Now I brought my stops down to the level of the last order. I'll earn 12 pips if I'm stopped out here. Now that I see I'm going to do pretty well with this trade, I bring my stop down even lower. It's really just a guess at this point, but I generally keep my stops 5 to 6 pips away from prices. When prices get close to my target, that's when I really tighten up the stop, maybe 2 or 3 pips away. I really get frustrated when prices hit my target and I'm not filled. I'm sure this has happened to you. Right here, I think I tightened it up to about 1 pip away, just before it closed out. Here's how everything turned out. 63 pips, using 3 positions. Now let me show you something interesting. Let's do an illustration once again. My broker uses units to trade with. 10,000 units equals $1 per pip. If my working capital equaled $2,500, I could trade 100,000 units at 50 to 1 margin. When I trade this way, I divide my 100,000 units by 4 and use 25,000 units, equal to $2.50 per pip, for each of my 3 positions. I earned 63 pips. 250 times 63 equals $157. 157 divided by 2,500 equals 6.3%. That's all for now. I'm George Smith. Thanks for watching.